Welcome. I gotta test everything out real quick, but in the meantime, I'm gonna tell you what this live stream is gonna be. We are gonna be live streaming Lemonade Insurance. It's a stock that you can invest in, a publicly traded company, and I'm very interested in how they are handling things. And the leader, the CEO of the company. Right now, I'm just making sure everything's actually live streaming. So I'm sorry for not making eye contact with y'all. I don't want to be rude. Anyway, yeah, I'm gonna be watching this video from Dave Lee. Dave Lee on investing. He's a YouTube channel, and let's make sure that everything's working in 3, 2, 1. What do you mean 3, 2, 1? This weirdo's talking to himself in front of a camera in a room all alone. Strange guy. Alright, let's watch this video. It's called Lemonade CEO Daniel Schreiber. How we're reinventing insurance. I'm personally invested in this company. This isn't financial advice.
In this video, I share an interview I had with Daniel Schreiber, the CEO of Lemonade Insurance. They are a fast-growing insurance company that recently went IPO earlier this year under the ticker LMND. They offer renters, homeowners, and pet insurance, and will be launching a life insurance product this quarter. The focus of my interview is to try to dig deeply into the mind of this CEO and how he thinks about his company, product, and future growth prospects. Deep dive into Lemonade over the past few months, and I've read, your whole S1 filing, your whole roadshow, your whole videos, interviews from you in the past few years, your co-founders, your CFO presentation at Barclays.
He's done more than me. Golly, bro. What did he just say? He looked at his... The most I did was read their, I forgot what it's called.
Your
Quarterly
whole
report.
S1 filing, your whole roadshow, your whole videos, interviews from you in the past few years.
Yeah, I looked at videos and interviews, but I didn't look at a whole S1 filing, bro. That's probably, 50 pages or something?
Co-founders, your CFO presentation at Barclays, and kind of been talking to people and trying to really understand the company from a very kind of deep and clear place. And so I kind of want to dig deep and really try to get a grasp of how you view your company, how you view the path forward, but more specifically, my biggest focus is, does Lemonade have a truly far superior product than anyone else in the insurance industry? And can Lemonade sustain?
He said, absolutely.
And grow that advantage over multiple insurance industries? Because ultimately, I think a lot of the future, of Lemonade will come down to how superior that product is, and how you can grow that advantage over time. So I'm wondering, to start out with, can you kind of share your thoughts on how you view Lemonade as a product compared to other insurance, but not just incumbents, but even can Lemonade be successful against other startups and other companies that are going to be trying to go digital as well?
The incumbents are very formidable players, and they have many things that we don't have, right? They've got sometimes 100, 200, sometimes 300 years of data and history and brand. They've got sums of money that seem astronomical by comparison. They've got tens of millions of customers, sometimes over 100 million customers. Dedicated teams.
Sometimes hundreds, millions of customers, y'all. I'm hearing opportunity. I know y'all probably are like, stop interrupting the video, man. My fault.
I got to know the CEOs of some of the largest insurance companies in the world. And I have to tell you, they're fiercely impressive people. Thoughtful, understand the impact of technology, are forward-looking and very cognizant of the threat and opportunity that technology represents. So I certainly don't want to sound dismissive of them. At the same time, I've had a few CEOs of genuinely the largest companies in the world say to me, Daniel, I fancy your chances more than I fancy my own. And they feel that yes, they have a clarity of purpose and a clear lay of the land, but getting there from here seems mission impossible. And they're heirs to all of this legacy and 100 years and tens of thousands, sometimes over 100,000 employees and brokers. And I remember chatting through the challenge with one of them, and I said to him, listen, you're just the CEO. And he was a little bit startled by that. And I said, every other aspect of your organization was architected with a different thing in mind than what you think you need to do. And I challenged them. I said, can you name 5 companies in the history of the world that reached your stage and your scale and were able to reinvent themselves in the way that you think you need to do? And not insurance companies, and they couldn't. And the reason really is that so many of the things that appear to be assets from the outside, when you look at them, their distribution models, their brands, their technology, actually increasingly are transforming themselves or shifting into being liabilities. So you're the CEO of a Fortune 50 insurance company, and you've got 40,000 brokers. When you took on the job, you thought that was a huge asset. Now you're not sure. Maybe that's actually an albatross around your neck and makes it more difficult to do what you think you need to do. You've got a technology stack that dates back to the 80s and swallows $1-3 billion a year, but you still can't turn it into a black box. It really is a black hole, and you just pour money into it, and it's just keeping up, and you've still got COBOL base at the bottom of it, and the engineers who designed it have retired or died, and it doesn't seem like such an asset. It really seems like something that's slowing you down rather than empowering you. You look left and right, and you've got these wonderfully highly motivated people who've spent 30 years at your company and are senior levels of management, but they were groomed for legacy preservation, not for business transformation, and they're just not the right people for this mission. You wouldn't have hired them all those years ago for this. And the same is true throughout your company. And suddenly you want to hire the people that Google is hiring, but those folks don't want to come to your company. So you say, okay, I'll make some bold moves. I'll buy some companies, which doesn't work either, by the way. But then you discover they've got shareholders who just want their 5% dividend year in, year out with no volatility. And they appoint the board. And from above, you've got that. And from below, you've got this. And incredibly difficult. I won't say can't be done, but it is the classic innovator's dilemma. And there are...
Imagine you're the leader of this army, this massive army, and it's been dominating for the past 100 years, right? But you have the foresight and the vision to look 10 years forward. And deep down, you know that army isn't gonna last. And because of basically what he's saying, everything that everything that all of these legacy insurance companies have built, it's not built for this era. It's not built for the internet age. For the times are changing. I'm gonna shut up now.
Structural reasons that make it genuinely difficult for companies that were built and optimized for the industrial revolution, stepping into the digital revolution. They're just flat-footed. And when they do try to be nimble and young and hip, sometimes it just looks silly. A year into our business, I published a blog post giving out awards for the #1 copycat of lemonade. Liberty Mutual took the prize for Lulu, which was a citrusy fruit that they launched with copying our logos and our naming and our pricing and everything. And it was just, it made you feel uncomfortably, like squirmed, like, guys, have some dignity. You're an incredible company. Do something that's authentic to you. Don't try and be a startup. That's just not what you are. So it's one of those really tough things. It's the David and Goliath, and which isn't to say I'm being dismissive of these companies. I'm not. Come back in 20 years, they'll still be here. But I fancy our chances and the chance of companies like ours more in doing what we're doing, in playing our sport. I said to one of them, if if you want to beat Kasparov, you have to challenge him to a game of basketball, not to a game of chess. So it depends what game you're playing as to kind of what strengths you bring. And the game that we're playing, they're not well suited. You wouldn't architect them today to play that game.
Yeah, and imagine, like, I like the way he thinks, where he's humble. He's not like, oh yeah, those are some companies that won't be around in 20 years. They could be. Will they be successful? Will they be giants like they are now? Who knows? But what he mentioned about the companies, hold up.
Kasparov, you have to challenge him to a game of basketball.
Oh, okay. Having a different game that you're playing. Lemonade, as well as the other startups, which I haven't looked into, they're playing a long-term game. And it seems like the more and more that legacy companies are straggling, their attention and their focus seems to be going towards more short-term things, especially the investors, who are in it for the dividends, who are in it for safety. If 20 years, they're not looking at 20 years down the road. They want their dividends, right? That's short-term thinking. Lemonade, it's thinking long-term in terms of acquiring customers that are young. Like, I think a lot of their focus is on the young generation. And imagine you have such a good customer experience that you have those customers forever, basically. You're going to grow with those customers. And that's the whole philosophy of what Lemonade is built on, versus legacy companies, which is a profit incentive versus customer centric. Which, if you look at Lemonade, Lemonade Insurance Investor Relations, I'm a big fan of the customer centricity that they have. I was gonna pull something up that goes over that, but whatever. Let's go over here. Yeah, it's kind of similar to Amazon, really.
Basketball, not to a game of chess. So it depends what game you're playing as to kind of what strengths you bring. And the game that we're playing, they're not well suited. You wouldn't architect them today to play that game.
Mm-hmm.
And maybe we'll come back to it a bit later, but I think that the differences, as pronounced as they are today, they're not converging, they're diverging. They're becoming more pronounced over time. Large insurance companies every now and again update their software, their core systems. I don't know with what frequency. It varies from company to company, but say once a quarter, a few times a year. Yesterday, we did 32 production pushes of software, 32 in one day. This month, we've averaged over 20 a day, including weekends. So you just realize that as pronounced as the differences are, there's reason to believe that they become more and more pronounced over time. They don't converge, they diverge. And then you come to the newcomers, and that's a very different story. And there are some companies that are interesting and impressive. It has been surprising and to some extent disappointing to me to see that there aren't more. When we started Lemonade, we were running like hell because we assumed that everybody's behind us trying to catch us. And at some point we turn around and there's one or two players out there, but there isn't this horde of would-be Lemonade or other kind of companies out there, which is interesting.
That's so interesting, y'all. And people, I think Lemonade did catch a little bit of media, mainstream hype, but not anymore, bro. Like, let me show y'all. Lemonade. Like, if you look up Lemonade Insurance on YouTube, a lot of the recent videos are like, kind of like, oh, the hype has died down. What happened? What happened, guys? What happened to the hype? Like, you know what I mean? But sometimes we just gotta look at it. If you believe in the company, when shit hits the fan, bro, are you still a fan? That's a Kendrick bar right there. And it's facts. Alright.
Interesting. it's a prize worth fighting for, but there are not many people in the fight. So you can name 3 or 4 companies, but you probably can't name 5, which is kind of shocking when it's 11% of GDP, $5 trillion industry. And I think that we're very
$5 trillion industry, bro. Sorry, I just had to speak my piece on it.
deferential and respectful of all the different things that are being tried. But we're not bumping into insurtechs in the marketplace. We're not losing business to them today. We're much, much more focused on the incumbents than we are on the startups. And it's difficult once there are 2 or 3 names out there and they're well funded and they've got the brand recognition out there. Those things start to create a moat. They scare away other investors. The capital requirements are non-trivial. The data feedback loop starts creating a real flywheel. That means that the longer you've been at it, the better you are, the harder it is to catch up with you. And having said all of that, kind of we spoke about incumbents, we spoke about newcomers. One of the amazing things is you don't have to believe that Lemonade alone will be successful to believe that Lemonade will be successful. This is not a winner-takes-all industry. One of the CEOs that I was chatting about earlier said to me, I congratulated them, they had an incredible quarter, and they did over $100 billion that year. And I said, oh, well done, congratulations. And he says to me, Daniel, we still only have 4% market share. And that notion that you can be a Fortune 50 company, do $100 billion and be a bit player just gives you a sense of the, at first approximation, unlimited nature of the insurance space. So really, we don't spend much time looking at our competition. Honestly, we determine what we're going to do based on what our customers want. That sets our agenda, rather than looking ahead of us or behind us to spend too much time looking at what others are doing. This isn't.
It kind of reminds me of how Jeff Bezos thinks. In one of the classic interviews with him, he mentions, this is probably early 2000, where he's like, hey, we don't look at competitors like that. We look at what our customers want. And it just really, I just really want to emphasize that point.
Ultimately, a winner-takes-all business.
Mm-hmm. Yeah, it seems to me that a lot of Lemonade seems to be your focus on efficiency is kind of striking to me, and it seems to me that the priority that you guys place on just being as efficient as possible, kind of like taking the ideal of what would it take if we just had the most absolutely efficient process in everything we do. It kind of seems to me a little bit like that was the mindset of how you set up the company. Am I off, or is that similar in lines?
Not at all.
Okay. Because like one example is when you look at, you talk often about Lemonade being built on a digital substrate and how important that is. And when I think about that, I think most people don't realize how complicated, how convoluted, and how just a monstrous of a beast these incumbent software systems. And everything is not like a lean system that manages, the sign up process or the claim process or, customer service, all this stuff. But you made it a huge priority from the very beginning to have one system that was super clean, super lean, that you guys built yourself, that could handle the entire process. And to me, like, I think that's underappreciated. I think that's not that easy to do, even from a pure software, standpoint.
If you don't know what he's talking about, we're going to time this, right? Let's say I want to get insurance. I don't have Lemonade insurance. I don't have any insurance right now. But I'm going to download the Lemonade app. If my internet wants to load. I'm typing it in right now. Oh, it's here. Oh, it's 5 stars on the App Store. Nice. Downloading that right now. By the way, this video is not sponsored. Hit me up, Lemonade. So I'm waiting for that to load. But while I'm waiting for that to load, I'm going to let them continue talking. And we're just going to see how long it takes to get everything set up.
Can you kind of share a bit, like what was your thought process, as you guys were tackling that problem, and how has it been building that? Like, how much dedication, how much focus, and what did it take to build what you have? And a lot of that stuff, I think people aren't seeing. All they see is the app, right? They see the sign up process, go, okay, or the claim process, but they don't see the entire back end software system that is running your entire operation in a way that's so lean and so efficient. So hopefully you can shed some light on that.
Sure. First of all, thanks. I don't get that question a lot, and you're absolutely right. As Shai and I were founding the company, we did the rounds of seeing the systems that are available off the shelf. And I'll share with you a story.
Before he tells the story, bro, I'm gonna show you. Okay, so my internet, just download Lemonade. This is the first product experience for me. First product experience, bro. This is basically an unboxing. Alright? So imagine I wanted to get insurance, right? How fast would this take? Forget everything you know about insurance. The world's most loved insurance, powered by bots and AI. Okay, so swipe. Okay, bro. Okay, I gotta sign in. I'm not a member. Oh, okay. Take Lemonade for a spin. All I had to do was swipe a couple times, and I'm about to check their prices. Put in my first name. Put in my information, yada yada yada. How long would that take? And we're doing this live, so I have no idea how this is gonna end up. Okay, verification code. This is a very interesting experience, y'all. Very clean. Oh shoot. It's Maya. I don't know who that is. Okay, she said, "Hey Benjamin, I'm Maya. I'll get you insured in no time. Which would you like?" Alright, so 4 options. We got renter's insurance, homeowner's insurance, pet health insurance, term life insurance. Let me get some homeowner's insurance. Interesting experience, bro. Is there anything like this in the industry? To start, I'll need your home address. I'm not gonna go through the process, but y'all know what I mean, bro. This is a very interesting and clean, intuitive concept. And that's what I love, bro. Convenience. Lord forgive me. But it's such an interesting product, The care that went into every single detail.
We were getting one presentation after the other by these off-the-shelf companies that support most of the insurance companies out there. And I think on the 11th company that we met, Shai comes out. He came out of all of them kind of scratching his head because we were 2 people and a dog with scrambling for our seed round of funding and wanting to run to market. And basically what came out of these meetings was it's going to be an 18-month project. You have to customize these big systems and a multi-million-dollar investment for the software and services that you need. And after one of the meetings, I remember Shai comes out and he says to me, "Daniel, either I'm totally not getting this, either I'm just missing something huge, or I could code this on my Apple Watch while driving home this evening." Now, there was some hyperbole there because he couldn't code it on his Apple Watch while driving home that evening. But the systems that were out there, and presumably still are, may be helpful to huge legacy providers with all the complexity that they have to manage, but not one of them was right for what we wanted to build. And frankly, not one of them was customer-centric. When you come into our backend systems, we've got a system that we call Blender, and the same attention to detail, architecturally, performance, and in terms of user interface that you see in the app, all of our team sees in the back end as well. And when I'm talking to a customer, I can see everything about the customer. We didn't grow higgledy-piggledy by buying different systems and different companies and kind of combining them all. As you say, a single system. So questions that you ask customer support, marketing campaigns that you engage with, claims, policies that you had, all of it appears as a timeline, almost like a Facebook-style timeline which doesn't exist in the industry. It may sound like, obviously that's what you would do, but it isn't. You call up your insurance company and you say, hey, it's David Lee. They say, what's your policy number? They don't know who David Lee is. They know policies. They're policy centric. And the idea that that's how you would build a company around a policy rather than around a customer was an anathema. So yes, we started from scratch. What we found, and this will tie into what you're asking me and also into what you asked me before about competitive advantages. I told the team a while ago, and at the time it was forward looking, and now I can say it's true in the rearview mirror. I said, the stuff that you see as a customer, that the press sees, that our competitors see, is the 10% of the iceberg that protrudes above the waterline. You see a playful app that will sell you insurance in a matter of seconds. You see a claims bot that will pay claims in a matter of seconds, etc. And there we do optimize for speed and efficiency, but not at the expense of customer satisfaction. We do have humans. You can speak to them, but if you don't need to, why would you want to? You just want a quick answer. The really amazing part is the 90% that you don't see. The data sets that those interactions generate, the relationships between them that become available, the web that forms from all those different interactions and the three-dimensional picture that the data presents of David or of Daniel and of the differences between us. And how with every turn of the flywheel, those become stronger and deeper and more insightful. And if you don't build a system yourself, if it's not your machine learning experts who design the algorithms, your software folks, if you don't have a single system that handles claims and customer support and policy underwriting and, then you never get to create that kind of thing. And you can't bolt it on afterwards. That has to be built, as I say, on a digital substrate. And it cuts across the company. So
I want to interrupt for a second. Having a deep understanding of the customer, not only, that's unparalleled, bro. Using data, using artificial intelligence, and just this kind of character that they have of every customer so that they can serve as much as they possibly, as much as robotly possible. I can't even say humanly possible. Yeah, having that customer understanding is so important.
Somebody from finance will come to me and say, Daniel, the business is growing. We need some more people to help with financial filings. We want to hire another finance associate. And I'll say to them, are you sure we need another finance associate? Maybe we need another engineer. Because maybe we can automate those things and the algorithms can find them and do it for you. And indeed, today we've got an internal bot, just like we've got external bots, internal bots, and somebody in finance who needs reports for regulators chats through Slack with our bots, says, I need claims reports from this date to that date, whatever it is, and a second later it appears in the Excel in their Slack. And the same will be true when somebody from underwriting or other functions say, oh, we need more people. I'll say, do we need more people, or is there something that technology can achieve? And time after time, we discover that technology can do the things, the menial task, and not only menial tasks, that we used to think we needed to hire people for.
Imagine the advantage that has in the long term, bro. Instead of a company thinking, okay, we need overhead, you're minimizing that as much as possible. You don't have to pay those as as much employees as the other insurance companies have. You can reinvest it all into the company. And I believe that Lemonade is something I forgot to mention. I think it's a B corporation, which means it's a non-profit or not for profit. I'm not really sure. But the reason they did that is because they wanted to set up the foundation to where the customers, the company's incentives and the customers' incentives are aligned, instead of having a for-profit business where the company is like, yo, we need profit, and then the customer's like, hey, I want good service. And instead of them knocking each other out, contradicting each other like a traditional insurance, Lemonade is a not-for-profit. And so they're not incentivized by profit, they're incentivized by how can we bring as much value to the customer as possible so that we can provide as much wealth transfer and maybe value in terms of money for the charities as well. And, reinvesting the flywheel, like he said.
I'm curious, in terms of engineers, like how many engineers do you have in your company? Are you keeping track of that?
We have about 150 people in our product organization. So that includes, most of those will be actual engineers and data scientists, and some of them are product designers, but it's something in that ballpark. Don't hold me to that number precisely, but it's in that ballpark.
Yeah, I remember Steve Jobs once said that, the beauty or, the angle of Apple is they are at the intersection of science and humanities. And oftentimes it's easier just to focus on one, like for example, being very tech heavy, or on another side being very artistic or humanity focused. I noticed with Lemonade, there is this like blend I'm picking up where the tech is quite amazing. And again, like you're saying, like because so much of it is under the cover, most people aren't picking it up, for example, on the app. However, like I have some software background. So when I look at your app and I'm going through the interactions, I'm like, wow, this is pretty intense. Like the back end stuff is just amazing how you're able to, process risk on the spot, and not just that, not just the tech side, but then you have a humanity side where you're leading people through a very just intuitive relational process, and your entire brand and whole interaction with customers has this very just kind of empathetic side that isn't very typical in a purely technical, focused approach. And so I'm looking at this, I think people don't understand how difficult it is to marry these two things, to hold these two values together in one hand, because oftentimes they can be diametrically opposed. Like, how did you guys do that? Did you is that just innate values that you guys have, or yeah?
If you're wondering like what makes that so important, there's a reason why Apple is such a huge brand, and how the intuitive experience of a baby being able to pick up the phone and know what to do with his fingers, that is powerful in terms of building a brand. I like their icon, bro. Shit. Now I'm messing everything up. I'm gonna shut up now.
What was the background behind that?
Sure. So I wrote a blog post a couple of months ago called Lemonade's Da Vinci Code. And Da Vinci in the sense of exactly the Steve Jobs notion that Steve Jobs had this, Da Vinci had it, but between those two, it's hard to find too many other names. Where when Da Vinci saw a bird in flight, he would think about heavier than air, the physics of heavier than air flight. He'd think about the biology of wings and muscles and flapping. He'd think about the perspective of light and how it refracts, and he'd think about the art, and he'd draw a beautiful painting of it all, and ultimately come up with a proto-helicopter. And I said that our Da Vinci Code is my co-founder, Shai. That our true secret sauce is that Shai, more than any professional I've ever seen, is this rare blend of, as you say, humanities and science. And you can have a conversation with him about the chamfer of the chatbot and the hue of the pink down to the nth degree. The design is really pixel perfect because Shai is that pedantic and artistic. And the wording of the text that appears in that chatbot. Also, I'm the native English speaker among the two of us, but he won't let me near the text because he just has it. He just really, really gets that. Through to what it takes to develop software that will deliver that 100% precisely at scale, securely, every time, and what it takes to build an organization that can do 30 builds of that kind a day. So Shai is just an extraordinary talent, really, really extraordinary. I've worked in tech for over 20 years.
Listen to what he says here, y'all. Listen to what he says.
worked in Silicon Valley and met Steve Jobs and Jeff Bezos and a bunch of other, Eric Schmidt, all these great people. And I write there in the blog that if I could choose between any of them and Shai as my co-founder, I would choose Shai every day of the week. He's really that good. And I'm doubtful. I think at this point, I'm hopeful that it's become inculcated into the fabric of the company. And we've hired people in his image, and that now is part of the very nature of the business. But we got there through sheer force of Shai's talent.
Yeah, I noticed. I had a feeling that the more I was diving into Lemonade, I'm like, this Shai guy, I think he's underrated because the level of technology. But then I noticed he's into like behavioral economics, kind of the whole mentality where it's not just technology, it's also the psychology and how people receive that. I think that also is an interesting thing where it's like, for people to compete with you, and let's say incumbents, it's not just that they have to, upgrade their stack and reinvent their stack, which is practically impossible for, multi-$100 billion company who has dozens of different, systems that they didn't even build, right? And but not just that, they have to also reinvent kind of their human side, right? And how they react, and not just react, how they interact and treat the customer, right? Not as just a policyholder or someone who is just, I don't know, a customer, but rather as someone on the same side, someone who you're trying to help and come alongside and prioritize as the number one kind of part of your industry or your company. And that to me seems extremely difficult too. And so this two-sided approach where it's going to be hard technologically for the incumbents to catch up, but also maybe even more importantly, the priorities or the values, and the relational side, I think it's extremely challenging.
No question. When I'm asked about kind of the threat to the incumbents, and by the way, I'm not particularly, I use it sometimes, but I'm not particularly fond of the moniker disruptor. It carries kind of negative connotations, but people think, and the grammar of the word suggests, that disruptors cause disruption. I don't believe that that's what happens. I think that disruption causes disruptors. That certainly in our case, the changes that are happening to the universe, certainly to Earth, to the planet. We are living through transformations that are stunning in their reach. You'd have to go back hundreds of years, maybe to the scientific revolution, maybe to the agricultural revolution, to see a change as big as the kinds of changes that were happening. And there it lasted much longer. We're seeing changes here that are happening at a pace that is exponential, not linear, and therefore really is without precedent in human history. And it is that rather than Lemonade that threatens the incumbents. Lemonade is we're trying to precipitate the wave, we're trying to ride the wave, but we're not the force. It's a secular shift. It's a systemic change in the world. That means that if you are set up to be broker-based and, as you say, not customer-centric, and there are all these things that made sense in the 1800s and have carried forward, very difficult to change.
Oh my goodness, bro. The internet, I completely agree with everything that he's saying. The internet combined with these supercomputers in our pockets, combined with the exponential growth and change that's happening and innovations we can't even comprehend, all happening all at once, bro. 100 years from now, bro, we're gonna be like levitating or something. 100, oh my gosh, I can't even imagine. Man, I wonder how long we'll be living as human beings, what the average lifespan is gonna be with all these technical revolutions, bro. Things are happening so quickly. Let's keep going. And that's why I'm excited about these opportunities that we can invest in, dude. So blessed to be in it. A time where I can go on my phone, find something I'm interested in, and not only find that at which I'm interested in, but use it as an opportunity to maybe grow wealth, to grow in connections with people. Let's get into it.
in my mind's eye, I liken it, and I wasn't there, so I don't know if I'm doing justice or not, but in my mind's eye, I play out a conversation around the boardroom of a big retailer circa 1995. I'll use Walmart, but they actually have done a better job than anybody else. A lot of the other names have disappeared, but let's take Walmart, for example. So in my mind, somebody comes to the board meeting of Walmart in circa 1995 and says, hey, listen, there's this new website. It's called Amazon. It's really pretty cool. And you can go on there and you can buy books, and now they're starting to sell other stuff, and maybe we should, do something like that. And they think about it, they say, yeah, hey, Jimmy, you know HTML, why don't you give it a try? And they think, and actually Barron's had a famous cover piece in 1999. The headline was Amazon.bomb, where they explain that Amazon doesn't stand a chance against Walmart, and they're going to be eaten alive. As soon as Walmart turns their attention to this, Amazon is dead. And what I think they thought at the time was that Amazon is a website. And hey, Jimmy, you can make a website and we're done. Let's move on. And here I go back to this phrase that I do use about the digital substrate. And you're talking now about culture. When you build a company on a different foundation with a different focal point, customer centricity, and a different factor of production, you're not using humans, you're using data and technology as the building blocks of your business. The differences are quickly apparent, but actually they run much deeper. And I go back to my point earlier that at the end of the day, 20, 30 years later, we know that Walmart and Amazon became more and more and more different. They never closed the gap. And technology can do that in a way that nothing else really can. If I told you that you can buy a cheap airplane ticket, so a low-cost airline, you would rightly assume that the chairs are going to be a little bit more crammed. They won't serve you a meal. They'll charge you for checking baggage, and the peanuts won't be quite as generous as the other guy's peanuts. Because low cost means low cost, and in our mind, that's what it means. An inferior product, but it's okay because I'm saving money. Technology has introduced this wild phenomena, which is I'm saving money for a superior product. Amazon gives me incredible service and costs me less. Uber gives me incredible service and costs me less. Airbnb gives me incredible service but costs me less. And this idea that you can crush costs, not at the expense of the product or the customer, but to the delight of the customer and at a lower cost, only technology can deliver that. And if you build a company using those building bricks, those building blocks, then over time, those things are going to manifest in more and more places in ever more powerful ways.
A lot of my companies are technology companies, bro. Actually, all of my companies are, all of the things that I'm invested in is technology. And that's because we are in such a disruptive time. We're growing exponentially in terms of innovation. And, you could look at it like, oh, diversify. I don't understand the whole notion of being willing to dilute your returns for safety, right? If I believe in the companies that I'm invested in, and I do, I'm going to invest in them. I'm not going to invest in something that I don't understand. I'm not going to invest in something that I don't want to understand. That's a tangent, but 30 minutes into the video, I want to get into there's hours left, half an hour left. I want to kind of look at the other side of the argument. Like, there's one video which says, hey, why did ARK Invest, what was ARK Invest against Lemonade for? I'm not really sure. Okay, there's a video here. Don't buy the dip. Let's see.
With Fundrise, the same kind of real estate investment.
I don't like you or your ads, dude. No, sir.
Has fallen by about 30% over the past few days, but if you're tempted to buy the dip, let me explain why you shouldn't. Hey everyone, my name is Ben. I'm a former JP Morgan investment banking analyst.
Hey, that's my name.
And welcome to Rare Liquid, the best channel for tech investing. Lemonade recently reported its quarter 4 2020 earnings a few days ago, so I'm going to be going over a lot of that and start off by talking about the good things about the company.
Yo, Benjamin got the Benjamins in the background, yo.
And then I'll talk about the bad things and what I'm personally doing. But with that said, I'm not a financial advisor, so please treat all content as for entertainment purposes only. Okay, so let's start with the good stuff from Lemonade's recent quarter. Lemonade's in-force premium increased by 87% from 2019 to 2020, driven by higher premiums per customer and an impressive 56% increase in number of customers. If you're not familiar with insurance, just really quickly, premiums are what you pay as a customer per month. So for example, if I was getting rental insurance from Lemonade at $10 a month, the premium is $10 a month. The in-force premium is annualized, meaning that for our previous example where the premium was $10 a month, since we have 12 months in a year, the in-force premium for that particular contract, let's say, is $120. Lemonade started off as a disruptive renters insurance company, but has since then launched new products including homeowners, pets, and life insurance, and this is how the company has been able to increase the premium it charges per customer over time. The company also grew their gross earned premium to $50 million, which represents a 92% year-over-year increase. Just as an FYI, gross earned premium represents the amount of the in-force premium Lemonade collects once the service is fully delivered. If you were trying to convince someone to invest in Lemonade, this chart right here would be the best thing to show them. You see here an increasing customer base, higher premiums being charged per customer, and thus a higher in-force premium, all at pretty impressive growth rates. In addition to this,
Yeah, pretty impressive is an understatement, bro. Exponentially growing from the beginning. We just got started.
management strongly hinted that it's going to be working on a new product that will launch later this year, and it's most likely going to be car insurance.
And you're absolutely right, we're not done, and we did hint that we've got a major launch coming. In fact, we have more people working on this yet to be announced product than on any of those other products that I just mentioned. So it's a source of great excitement internally, but I'm sorry, Wilfred, to disappoint you. I'm not going to announce it right now.
Keep smiling if it's auto insurance.
Does that count?
There we go. I think we've got it.
This could be a huge revenue driver for the company, and I do like that Lemonade is expanding pretty aggressively into new products. As long as the company can grow its customer base pretty substantially over time, then I do think the company could have a bright future ahead. But in my view, that's pretty much where the good stuff ends. So next, let's talk about why the stock is down. The first thing I need to do is to set the stage by showcasing Lemonade's extremely sky-high valuation. The company was trading at about $132 per share, which gave the company a market cap of around $8.5 billion. Adjusting for the company's cash of $1.2 billion, which incorporates the company's latest follow-on offering, the company had an enterprise value of about $7.2 billion. In the latest quarter, the company guided to a midpoint of $115.5 million in revenue. The company was trading at 63 times 2021 revenue, which is higher than pretty much all of the fastest growing software companies in the world. But that's the thing really, in my view, Lemonade is not really a software or pure tech company, it's really an insurance company. The most obvious proof of this is in the company's gross margins, which jumped in the latest quarter to 37%, before the full year of 2020 was at a very subpar 26%. The reason that Lemonade will never be a pure software company is because as an insurance company, it needs to pay customers who file successful claims. This expense is called loss and loss adjustment expense, and that, in addition to other insurance expenses, represents Lemonade's cost of doing business, or its COGS. Given that the company was trading at a higher revenue multiple than pretty much every single high growth software company, Lemonade really needed to crush earnings in order to propel its stock forward. Quick shameless plug for my Patreon and Discord. I messaged
No! Alright, so his argument is that because lower margins, that's the reason the price is dropping, which, and I think he's also talking about the valuation of the company, which is what a lot of people talk about when they look at something and underestimate its value. Like people, for example, people would look at Tesla and be like, oh, it's overvalued. Okay, but for Lemonade, I want to talk about the margin that he was mentioning. He's talking about how because of the low margins, it's less attractive to investors. And to be honest, as an investor, if you're only looking, I'm not saying that that's what he's doing, but if there's any investors out there who are doing this, that's kind of the short-term mindset. That traditional, that like you're better off investing in a traditional legacy company, because it's very common for a startup company to be focusing on low margins or focusing less on short-term profit because they're constantly reinvesting everything they have into that cycle of acquiring as many customers as possible. And imagine, right? Lemonade is such a good customer experience, and they're growing exponentially, that all of the customers that they're acquiring, nobody's catching up. And even if some people do, and obviously, like Daniel mentioned, it's not a winner takes all game. There's so much opportunity in the insurance industry. And so to look at it as, oh, they're kind of a little overvalued right now. Okay. But if you're looking at it from a long-term point of view, that doesn't take away the amount of value and potential from the company, especially looking at something like margins. You know what I mean?
Messaged out to my patrons a few weeks ago that good gains over the past few weeks. My hope is that the info that the community on Discord and I provide more than pay sky-high expectations that Lemonade had given its valuations. Unfortunately, during the latest quarter, the company did not deliver. While customers have increased year over year by 56%, if you take a closer look at the quarter-by-quarter data, you can see that Lemonade added about 60,000 new customers, which is the smallest increase over the past 2 years. And it's not like the company is spending any less in marketing, which is pretty much in line with previous quarters. This slowdown in customer growth is something I would worry a lot about as a Lemonade investor because previous years. And see that Lemonade added.
What am I looking at here? I'm always so bad with balance sheets, bro. Okay, so slowdown in customer acquisition. Where?
About 60,000 new customers, which is the smallest increase over the past.
Where do you see the number 60,000?
Quarter data, you can see that Lemonade added about 60,000 new customers, which is the smallest increase over the past 2.
Okay, from 900,000 to 1 million. Whereas in 2020, from 2020 to from June to September, they added around 100,000. Okay. That's a fair point. I mean, I don't really think you're doing them justice. In a span of 3 months, that's not really, I wouldn't really consider that growth slowdown, you know what I mean? Like 1 quarter, it kind of slows down a little bit. Is it the end of the world though? I don't think that's what he's saying, but that's kind of like over exaggerating it.
2 years. And it's not like the company is spending any less in marketing, which is pretty much in line with previous quarters. This slowdown in customer growth is something I would worry a lot about as a Lemonade investor because it's really the biggest driver of the company's growth. In addition to all of this, about a quarter of Lemonade's customers are in Texas, which, as you probably know, was recently hit with a huge power outage. In the latest earnings call, management stated that there will be a spike in its gross loss ratio, but no material effects to its financials, which I personally find a little bit hard to believe. On a separate note, some may also point to the company's improvement in its operating expense margin when compared to its gross earned premium, and it's true that it's gone from negative 156% to negative 89%. But the $44.5 million spent in quarter 4 2020 earned the company a total of just $7.5 million. Now, personally, I am okay with companies that are growing really quickly and have healthy margins to be spending a lot of cash and being unprofitable. But for Lemonade, with its slowing down of customers and poor margins, I really don't think the high valuation can be justified. So that's why I believe Lemonade stock has been on the decline. Of course, in addition to all of this is the whole macro environment where bond yields have been going up, which really punishes growth stocks. And so that's definitely a factor at play here as well. Okay, so now I'm going to provide a...
That's a fair point. You're saying that there's a potential for the stock to continue to be going down because of the fact that the company isn't producing the revenue that people would expect. Which then again, for me as a beginner investor, I always stick to the dollar cost averaging strategy. So like, it kind of ignores half of what, I don't want to focus too much on when should I timing it basically. If you still believe in the company long term, is this short-term struggle really a massive deal? Maybe. How is the management and the team handling it? That's one of the most important things in my opinion.
A pretty quick calculation of where Lemonade should be trading at, in my opinion. If we take a look at some of the fastest growing tech stocks in the world, of which all are growing quickly and have true growth margins in the 70s or above, then I think it's safe to say that at max, Lemonade deserves to be trading at a 35 times next 12 month sales multiple, which I think is still generous. And multiplying these together gives us an enterprise value of $4 billion. After we add back $1.2 billion in cash, we get an estimated market cap of $5.3 billion, which when you divide by Lemonade's fully diluted shares, comes out to a 82.68 share price, which represents a roughly 20% drop. But I think 35 times is still a really generous multiple given that the company's growth is in question and has poor margins. And I believe the company should be trading truly closer to 20 times, which gives us a share price of 55.57. Now, do I think that the stock is going to go down to $55? I think maybe if bond yields keep going up and we have a big tech correction, I think it's possible, but still probably not likely right now. Any reversal in the bond yields will likely drive the stock price back up, but I think over time, the stock will go back down at least into the double digits. Around $80 or so, I think is much more of a fair price, but still overvalued. And so that's why I'm personally staying away from the stock unless it somehow goes into the 50s or lower. All right, guys, that wraps up the video.
I mean, it all depends on how much you think the company is actually going to go up. You know what I mean? Like, I could think he's completely overlooking. Why is my mouse glitching out? I think he's completely overlooking, like, okay, the company's gonna be going down, true. Or if it does go down even more, I wouldn't really be worried about it because I'm looking 5 years ahead. I believed in the team, the company's vision, and where they are looking at, and what they're gonna be, what the potential is in the long term. And this whole kind of looking at, okay, when should I buy? Should I be staying away from it now? Would kind of be solved if you just look at it from dollar cost averaging. Not financial advice. I've always wanted to do that as a financial YouTuber. But he brought up some fair points. I'm going to take this off because my head is hurting. But he brings up some fair points. Overall, I don't really, but at the end of the day, I don't really agree with the notion that, hey, I'm going to stay away from this company. It all depends on how much you believe in it and where you see it going in the future. And, you know, it is important to look at the balance sheets and other stuff, which I'm kind of lacking in. But, hey, man, that's a part of the process as a investor. Thank you so much for watching, guys. I'm going to continue doing some other research. But in the meantime, that was Lemonade. That was reacting to Daniel Schreiber. Lemonade interview, CEO interview from Dave Lee on investing. Consider subscribing to him. Consider subscribing here if you're interested in opportunities that disrupt the world. Adios.